Beth, we got Elijah on the line. What do you want to ask him?
Obviously, you have a team. I'm curious as to how you found your team.
I've met a lot of people along the way. A lot of people come in just through basic networking, just reaching out, looking for deals, trying to raise money from people. And when you find someone that you think would add value to your operation, ask them to come on board.
I'm Brian Briscoe, host of the Diary of an Apartment Investor podcast. And this podcast is different than everything else out there. I bring together a new and an experienced investor on each episode, and I let the aspiring investor ask the questions that they need answered. So if you're an aspiring investor yourself, you probably will have the exact same questions. Now, before we get to this episode, make sure you hit the subscribe button below and that little bell to make sure you get notified every time we post a new episode. And now, enjoy the show. Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe with Streamline Capital Group, and I'm super excited for today's show. We got two great people on the line with us today. We've got Elijah Brown as our experienced investor and Beth Underhill as our aspiring investors. Elijah, Beth, welcome to the show today.
Thank you, Brian.
Great to be here.
Great to have you guys. As is tradition, Elijah, you're going to be up to the plate first. Love my baseball references, though I haven't played baseball in 30 years. Elijah, so tell us a little bit about yourself and how you got into apartment investing.
First of all, thanks for having me on. I appreciate it. I got started in college, my junior year of college. Started watching a lot of YouTube videos, fell down the YouTube rabbit hole with channels like Graham Stephan, Chris Crone, Phil Pustajovsky, and a few others. I just determined that I wanted to get into rental property investing. I initially started with single family, but I didn't have enough cash to do it, and I didn't have a job. So I knew I wouldn't be able to qualify for a loan or have down payment money. I actually called my cousin and my best friend and convinced them to jump in on it with me. They each put up $10,000 and I had a little bit of my own. And we went and we bought our first single family house in Florida. I did that 4 more times. And then I convinced my coworkers to go in on a sixplex. And that's when I started with multifamily.
Nice. So you're one of the few that started early on, before you had a career in something else. I wish I had the same drive, the same energy. I remember looking at something when I was in college and, looking at house hacking with some friends, but never pulled the trigger. So good on you.
Yeah, I was going for the investment banking route. I was doing I had an internship at Bank of America. I, worked at a hedge fund, and I realized that this 80-hour, 90-hour work week thing, and it was just not for me. And so I did not want to continue down that path, and I found real estate instead.
Nice. And what were some of the challenges that you had getting started?
First of all, not having cash. It's hard to get into deals without cash. And so I had to learn early how to raise money from other people, friends, family, and investors, but also being so young. I was just really young doing it. Realtors don't want to work with you. People don't really trust you. They just write you off. And so you have to establish some sort of credibility so that people will take you seriously. That was difficult to do.
Yeah. So how did you get over that hurdle? I mean, and I see this happen a lot. A lot of young guys come to the game, and I realize that I'm 40 something, somebody who's early 20s. And I don't know why this is, but maybe because I have two daughters in the early 20s, I almost immediately dismiss them as, okay, that's cute. How did you get over that? How did you actually build your credibility being so young?
Yeah, it was a lot of like fake it till you make it. I had, imposter syndrome, but it came down to really two things. It was number one, being as educated as I could be about it. So I watched a lot of videos, networked with people, read books, but then also I just brought a lot of confidence to the table. It sounds crazy, but I was really young, just like going out and like emailing everyone I knew, being like, I need to raise $100,000. Who's in? Here's a PowerPoint presentation. And so I really didn't have much experience, but people trusted me, and that was incredible.
I'll tell you something else, and this can be good or bad depending on what you're talking about. I think as I've gotten older, I've gotten more and more inhibitions. There's more and more things that I don't want to do, and maybe as a 20-something year old, you just didn't have that fear, that same well, that's not going to work. I might as well not even try it type syndrome that a lot of 40 somethings have.
Ignorance is bliss. And like when I was younger, I definitely wore a nice pair of rose colored glasses,
Mhm.
and I was hungry as well. I was willing to put in the time. I got a job after college and I was working a lot of hours, but I'd come home and I'd still like work till midnight just trying to
Mhm.
put deals together. Yeah, you got to have the energy and the drive to be able to do that. What we call it moonlighting. Well, I was daylighting and moonlighting. I
Yeah.
was working at my corporate job and also putting deals together, taking days off to put deals together and just trying to make it work. Yeah, it's not easy, but made it happen.
Awesome. Well, where was that corporate job of yours?
Yeah, that was at a real estate investment trust in California. They specialize in healthcare real estate.
Okay. Interesting.
Yeah,
How long did you stay there?
I was there for 4 years. Actually, I wrapped up my time there just a couple months ago.
Hmm. Nice. Congratulations. I'm gonna make an assumption. Are you doing the real estate full time now?
I am. I am. Finally, I do not have a W-2 anymore. It's just me.
Mm. Awesome. Awesome. That's great. I'll tell you, it's they are the golden handcuffs. I got rid of my W-2. Unless I got rid of, I retired from my job. Also no longer have that W-2. And it's great until you go to a bank and ask for a home loan. That's my opinion. It's probably the best thing ever. And then the bankers are looking across the table at you. What do you mean you don't have a W-2? Other than that one little technicality, I think that's a great place to be. So 4 years at a real estate investment firm. Now, how much of what you did there translates to what you do now in multifamily?
Very little. I started out doing asset management and for senior living facilities, and then moved over to leasing for medical office space.
Mhm.
And what does translate was corporate structure and being able to present things to people and have professional conversations and communicate. So that was definitely the important part. But the mechanics of actually doing deals from start to finish, almost not at all. Usually in those corporate settings, it's like you are in one department doing one task,
Mhm.
corporate finance, asset management, investments,
Yeah.
capital markets, whatever it is. But when you're, starting a private equity fund or you're doing apartment investing as a mom and pop investor,
Mhm.
you're really wearing all the hats in the
Yep.
beginning. You've got to know how to negotiate and put deals under contract, conduct due diligence, negotiate with a bank and close and raise money and asset management. You have to do all of it. You really don't get that from the corporate experience.
Yeah. Yeah, that's a good point. I mean, the larger the corporation, the more likely every employee is to be specialized in one small task, and the less likely they are to be the generalist like you need to be starting out in multifamily, a little bit of everything. Thanks for that explanation there. That's I think a lot of people have the same issues. And looking at I spent 20 years in government in the military. And when I got into the Pentagon, one person at one desk does one single thing. They're cogs in the wheels. And my understanding is corporate America isn't too dissimilar. Well, cool. How's a day in the life right now for you as a full-time real estate entrepreneur?
It's interesting because, okay, so a few months ago, I no longer have my W-2, but I'm an Army reservist. And
Mm.
so I have this commitment that I have. And, typically it's one weekend a month and then a couple weeks a year.
Mhm.
Well, I just went to a school last month. I've been pretty much off the grid for a month, and
Mhm.
now I'm just getting back into it. It's like right now is when I'm first starting to go off on my own and be full time on my own. It's kind of scary. I don't have the consistent paycheck anymore,
Yeah.
but I know that my hours are worth way more now. So
Mhm.
it's I'm doing the $1,000 an hour tasks, not the
Mhm.
$60 an hour tasks.
Yeah, yeah, I love it. I love it. That's one thing that I'm very cognizant now of, and trying to offload as many of the lower dollar per hour tasks as I can, just to make sure that I'm focused on the right things. I would say for most aspiring syndicators, up front, you got to be that generalist, you got to be that do everything, and know a little bit of everything to get the ball rolling, and then start looking at offloading. That's a great point. So let's talk a little bit about, one of the properties that you've done, you've gotten under contract and have operated. Pick your
Sure.
first or your favorite and let us know a little bit about it.
Yeah, it was one that we actually just sold about a month ago
Nice.
in Phoenix. It's in an eightplex in Phoenix that we actually, this was a flipping deal, so we flipped it in 8 months.
Mhm.
The purchase price was $900,000, which was about $112,500 per unit. We spent a little over $500,000 on the renovations, so almost 70,000 a door. It was like full gut job renovation, and then we
It's
sold it for
70,000 a door. Did I hear that right?
yeah,
Okay, okay.
yeah. We're
Just
doing like
make
everything.
sure,
So
make sure.
yeah,
Yeah, that's a big number for renovation
you
and
rip it to its
full
studs and
guts. Yeah.
redo almost everything. Yeah. So
Yeah, okay.
it's quite expensive, and renovations got a lot more expensive over the past year as well. It's definitely tough to make the numbers work right now.
Mhm.
So we spent like $550,000 on that, which was about almost $70,000 a door for the 8 units, which is like doing almost everything.
Yeah.
But we've found that renovations have gotten significantly more expensive in the past year, due to inflation and different supply chain issues. So it's becoming very difficult to make numbers work in Phoenix
Yeah.
on our renovation jobs.
Okay.
Yeah, that was a great project. We were able to achieve a project level return on investment of 66%, which was awesome, and that trickled down to a 46% for our investors after the promote payment.
So even after putting 70,000 in per unit, you were able to still hit that 60% mark. All
Yeah,
right. That's a lot of value add. How long did you guys hold the property?
that was 8 months.
8 months. Okay.
Yeah.
I know rents and values in Phoenix have done extremely well over the last couple of years, and so I think part of that, I'm guessing part of that is tailwinds, but at the same time, if you're putting $70,000, there's got to be enough meat on the bone there for the juice has to be worth the squeeze. How I
We
guess how
got
many
it
different
for a
metaphors can
good
I use?
price.
Yeah.
We got in at a good price,
Mhm.
and rents were going up like crazy. And
Yep.
then we were able to lock in buyers within a couple months of
Mhm.
owning it ourselves. There's a lot of demand from the Chinese right now for American real estate,
Mhm.
and Phoenix is one of those markets that they like. And so we were able to find a group of Chinese investors to put it under contract.
Mhm. Now, when you guys were doing this gut rehab, did you empty the building? Did you buy it empty? Tell us a little bit more about that.
We did. So, we typically look for buildings that are on month to month
Mhm.
leases, or that have, near term expirations, or are vacant. I believe with this one, it was month to month tenants.
Mhm.
And so we were able to give 30-day notices and then have the building cleared so that we
Mhm.
could renovate.
Okay. And so you did the entire building, and then before selling it, did you start putting new tenants in, or did you leave that to the next owner?
For this one, since it was already under contract before completion, we didn't actually have to do lease up. But for another one that we're working on, which is a sevenplex,
Mhm.
we're in the process of lease up right now because it's not under contract.
Mhm. Okay. Okay. Got it. Got it. Makes sense.
It's a lot easier to sell a leased up building because of the financing and the day one cash flow.
Yep.
So it's much more difficult for someone to acquire an empty building.
That does make sense. I mean, on the flip side, I mean, it depends on who the buyer is. A lot of people who are in that position trying to lease up buildings. We've been on the receiving end of one of these before where, sometimes the goal is just to fill it as fast as you can. So it's you got to know what the buyer is looking for. If you have a buyer lined up, that's a term of
Right.
negotiation. Hey, do you want us to fill it? Or do you guys want to come in and start filling it yourselves? And I
Right.
think there's a little bit of go between on that one.
Absolutely. And one thing you mentioned about trying to fill it up as fast as possible, that's absolutely right.
Mhm.
And but not only that, filling it up at the highest rents possible so that the cap rate's higher, because it'll be a better deal to get a higher price for it.
Yep.
So it's we'll do gift cards, as high as 2,000, $2,500, just to get someone in at the rent price that we want.
Yep.
And so we're kind of, playing the game of trying to lease it up quickly, but also getting the higher rents is more important.
Yeah, and that's where, a lot of people when they underwrite, and I know a lot of the newer investors when they underwrite, they completely glance over that concessions line, but a lot of
Mhm.
times you give a little bit to get a lot more in the end, and that's
I'd
exactly
rather give I'd rather give a gift card or a
yeah.
concession or a discount than lower the rent
Mm.
because the concession doesn't always hit your stabilized NOI. It doesn't really transition over to the cap rate, whereas the rent does.
It absolutely does. I mean, the concession will come out on one single month, 8, 9, 10 months later, when that tenant's been paying the high rent for 6 or 8 months, it's on their T3 income where that concession
Mhm.
drops off. It'll be on the T6 income and the concession's already dropped off. So yeah, I think you make a great
But
point.
and on the flip side, it's not necessarily indicative of the market rent
Mhm.
because you gave a big concession to get someone in there at a higher than market rate.
All right. Well, cool. So that sounds like an amazing deal. Glad it worked out
Yeah,
for you. And
thank you.
um, we wish you the best success on the next ones that you guys are running. That said, question I love to ask everybody. It's like peeking into somebody's soul. Not really. I'd like to learn a little bit more about your motivation. So what's your big burning why?
It's interesting. I actually thought a lot about this.
Mhm.
So the first reason why I do this is because I'm a deal junkie. I love doing deals. It's just what gets me going, what wakes me up in the morning.
Mhm.
And then the second thing is for me, and I think actually for almost everyone, it's the best risk adjusted way to get wealthy
Mhm.
other than finding a pure arbitrage
Mhm.
in the secondary markets. You get high returns with low volatility. It's leveraged. You pay almost no taxes, or you defer the taxes, and then you get monthly cash flows as well. So I think it's like the best way to do it.
Mhm.
And then the third thing is the passive income, so that I can do what I want with my family forever.
Yeah.
So that's really, but multifamily specifically, the reason why I'm interested in multifamily is number one because it's scalable. It takes me almost the same amount of time, the same amount of work to manage a 10-plex or a 20-plex as it does a single family house, which is crazy. And then the value of that property is tied to the income for an apartment building. Unlike, single family where it's a lot of like market hype and comps and speculation. And when you can quantify the value, you can then project an exit price and you can forecast cash flows, which makes it less risky for the investors.
Mhm.
And then it's easier to leverage. So unlike applying for like a normal home loan where they go through all of your pay stubs and your tax returns and everything like that, it's usually based on the numbers of the deal, not your personal finances. So
That's something that is amazing. I mean, we talked about, or I mentioned earlier, the W-2 thing and trying to get a home loan. I eventually got the home loan. It was difficult without that W-2, but I've signed on, 10 different commercial loans without anybody
right.
ask question about my W-2. So
And
it
probably have like $30 million of debt. That's like
yeah, I
it's
mean,
all commercial, right?
well, we've sold. I've racked up more than $30 million of debt. We sold a couple of assets already, so that number's, probably a more reasonable 20 million right now. I mean, end of the day, without a W-2 income, banks are standing in line trying to, give me 5, 10, $15 million checks. Whereas, the local bank down the road, it's like, oh, we can't use that income. It's got to be this type, Anyway, great
Now, when you
point.
do get into like the bigger deals, though, you do need to have like what they call, I think, reserves. So usually you bring in a KP or a key person to
Right.
just hold millions of dollars in their bank account and provide their bank statements just to show that your group has the reserves to pay. But that's still nowhere near the level of invasiveness of like applying for a regular
Yeah.
mortgage.
There are a lot of people. I'm starting to meet more and more of these folks. There's a lot of people with large balance sheets that keep 7 or low 8 figures liquid so they can
Mhm.
literally qualify for every single potential loan
Yeah.
out there for multifamily properties. And it's
Yeah.
almost like balance sheet for sale is what it
And it's a
is.
great way to get sponsor shares. I mean, those people are getting, 10, 20, 30% of the sponsor shares
Yeah.
for doing almost nothing.
So it's lucrative for them as long as they're picking their partners wisely and as long as they're
Right.
picking their deals wisely. I have heard of a couple of people get on the lender blacklist because they sponsored a deal that went south. So there is some risk involved, but once again, as a new aspiring investor, you don't have to have the same type of finances. You don't have to have that $5 million net worth to get a $5 million loan because you can
Right.
find somebody who does. So great point there too. So Elijah, last question for you. What's
Sure.
next?
Yeah, so I've got 30 units right now that are under renovation,
Mhm,
and I've got 3 properties for sale. And we've noticed a significant slowdown in the market.
mhm,
Specifically, I'm in the Phoenix market. So we're being very careful right now and trying to focus on our current projects. And I don't think we'll be looking to do any more of those short-term deals for the time being,
mhm,
at least until the market stabilizes a bit.
mhm,
But for our next phase, we're really looking for deals in the 50 to 100 unit range. We did those 3 to 20 unit deals over the past 3 to 4 years, and
mhm,
now I'm looking to go bigger. And with that, I want to use a 7 to 10 year strategy
mhm.
and go more for cash flow
Okay.
than a 3 to 5 year quick equity flip. We're looking to partner up also with other funds so that we'll just provide capital raising services in exchange for sponsor shares. I realized that doing all of the jobs from finding the deal, underwriting, asset management, and capital raising, everything, it's too much. Like I'm getting burned out doing all of that. One piece of advice Jim Biggs gave me was try to like be the best at like one of those things. And so I think like the direction that we're trying to move in is to be, really good at raising capital. And if
Mhm,
we can find deals that are really good that we also want to operate, we'll do that too. But
mhm.
I'd like to at least take the easy route on a few deals in the future, just raising capital,
Yep.
getting sponsor shares,
Yeah.
things like that. We've got a lot of investors that we want to make sure that their capital is allocated to strong deals. So that's what we're going to do.
I like the idea, and I'm doing the same thing for the first time ever. I am just
Mhm.
raising capital on a deal. It's a nice place to be. It's still a lot of work, but I definitely agree with what you say. We talked about this earlier, going from generalist to specialist. New syndicators, I think, have to be generalists, but eventually, the money, a lot of the money comes in specialization. There are a lot of people who are really good at finding deals, a lot of people who are really good at raising money. If you can get really good at one of those things, you're gonna do extremely well in this industry. Well, cool. I'm gonna shift gears now and bring Beth on. So, Beth, welcome to the show today.
Thank you for having me. I'm excited to be here.
Yeah, excited to have you. Let's talk a little bit about you today. So, tell us a little bit about yourself.
I live in Cincinnati, Ohio, with my husband, 5 dogs, and we just became empty nesters because our only daughter started her freshman year at the University of Kentucky. We've been in Cincinnati, or I've been in Cincinnati for 26 years, my husband all his life. We're serial entrepreneurs. We started a construction business. We built outdoor living spaces. We started that together a year after we met. We weren't even engaged and kind of took that leap of faith. And throughout that time, I also had, as a side business, I had a catering business, a women's golf apparel and accessory business. It was all online. And then I also had a fitness studio.
Mhm.
And now here I am in real estate. So
Nice.
I've done a little bit of everything.
So,
Mhm.
what drove you to real estate?
Funny that you asked that. I've always been drawn to real estate. I actually, back in 2005, started taking some real estate classes. We had, my husband and I considered purchasing a franchise called Help You Sell.
Mhm.
At the time, I don't know if you're familiar with it, but it was one of those franchises that would, you basically would pay nominal dollars to get your house listed on the MLS, and this entity, this
Mm.
real estate brokerage company would just, you weren't paying the 3%, so to speak, if you were going to, sell your
Yeah.
house. And so we had looked at that and I started taking some classes. And then for the life of me, I can't recall like what
Mhm.
prompted us to just back off, but we did. And then, we've always just kind of been drawn to it. Or one night, middle of the night, I think my husband wasn't able to sleep, and he's watching some infomercial on flipping houses and how
Mhm.
someone was going to come to our area and talk to us, sell us on how to flip houses.
Mhm.
So he signed up, and next thing I know, we're heading to this one day wonder that led to
Mhm.
a 3-day weekend event that led to
Mhm.
a 5-day bus tour in Southern California. And in 2018, we started flipping houses, and so that's how we sort of got into it, which my story is a lot like so many people who start off in single family. But then it was a little over a year ago that I attended a multifamily workshop syndication,
Mhm.
or syndication workshop, I should say.
Yep.
And the gentleman that I went with, he was like, I just want to buy 100 apartments or 100 units, 100-unit apartment building. I'm like, how in the heck can we do
Right.
that? I thought it was absolutely impossible. I mean, I really did not understand that it is possible to do something like this. I thought that was just always so far out of reach.
Mhm.
But at the end of this workshop, my eyes were completely wide open.
Mhm.
And I was like, oh, like, okay, like, let me jump into this. I'm ready to go. So I started, just hopping on Facebook and joining every single Facebook group that there was, and learning as much as I could, and just the networking thing from Facebook to LinkedIn to Instagram,
Mhm.
and just immerse myself. And I became that generalist, learning how to underwrite, taking, if someone had an underwriting workshop or a Zoom, that would teach you how to underwrite. I think I signed up for, Michael Blanc's and
Mhm.
everybody's, learning that. And then someone approached me one day and said, if you really want to get involved in a deal, he's like, why don't you capital raise? And I'm like,
Mhm.
capital raise?
Yeah.
No, that's not for me at all. And
Yeah.
I said, well, you know what? I'll give it a try, I guess. He asked me, he said, well, how do you feel that you would do? I'm like, well, on a scale of what? He said, 1 to 5. I said, 3. And
Mhm.
he said, well, that's, at least it's better than 50%. So why not give it a whirl? So one investor that is local to me here in Cincinnati, who we've done some single family flips with, I approached him about this particular deal, and he invested 250,000 into the deal, and I was like,
Nice.
boom, there I
Yeah.
am. But that was it. That was the only investor I brought to the table, but it was something. And so I
You
thought,
start.
okay, it
Yeah.
was a start. It was a start.
Capital raising is possible. Yeah, amazing. So, well, cool. So we're gonna move into the question and answer. Actually, before we do, I got to ask you the big burning why question. I can't skip that. So, Beth, what's your big burning why?
My daughter, a legacy for my daughter. She is our one and only, and she's been the kind of the driving force behind so many things. I battled cancer 7 years ago. She was my why then, and I feel like it's just a solid opportunity for me to give back to her for all the support that she's given me. Even though she's only 18 years old, I feel like I've just been able to take so much from her. So she's my why.
I love it. I love it. Whys typically revolve around family more often than not. So
Mhm.
very much appreciate it. Beth, we got Elijah on the line. What do you want to ask him?
First off, I just want to say I love your story. It's great. I love that you started so young. I'm kicking myself that I wasn't able to do it.
Me
And
too.
and I think to something that you said, Brian, the older you get, the more fear that you have.
Mhm.
If you could tell me to go back in time and put myself back in your shoes right now, what would you tell me about? Because I'm still new to the capital raising thing, and I find myself completely paralyzed some days with it. But you seems to come easy. So I'm curious, what's your secret? Do you have any tips, tricks, anything that I can extract that maybe if I put myself in your shoes 20 years ago, I can emulate that?
Well, Beth, just hearing your story, I think, Brian, I think we got the roles reversed on this one. I think Beth is the experienced investor here. It's a really incredible story. All I'd say is that the only difference between flipping a single family house and doing $100 million deal is your confidence. Why not just add a couple zeros? It's really going to be the same amount of work, maybe a little more work, but there's absolutely no reason why you can't just swing for the fences and do it, especially with your track record of successful businesses. You're probably in a really good position to succeed with whatever goal that you have. Just go into it with confidence and figure it out.
I would say, confidence is definitely the biggest piece of it. When I started, That's what I lacked, was the confidence, and because I lacked the confidence, I didn't wanna put myself out there, and because I wasn't putting myself out there, I wasn't finding the investors, I wasn't finding the things that I needed to do. Yeah, I mean, confidence is absolutely huge in the game. Once again, I think difference between somebody who's young and, hasn't had that maybe some of the bad experiences, but, they come out when I was 17, I thought I could do everything. I didn't think there was anything in the world that I couldn't do. And, now that I'm 40 something, every once in a while, I still have the same confidence issues. Can I really do this? Even though I've done 10 properties and raised, over $10 million, can I still do this next time? Yeah, I think confidence is huge. And then once you get the confidence, just start putting yourself out there, start building the systems, start building the relationships.
Okay, great. Thank you. Another question for you. Obviously, you have a team. I'm curious as to how you found your team. Did you cycle through, some people until you found the ones that you felt confident that you could move forward with, or were they just buddies? You all decided to get into this. I'm curious as to how that came about.
Yeah, just different people I've met along the journey. I've had a few different partners and team members. They come from different places. Well, the guy I'm currently partnered with on Gold Hawk Capital, which is the fund that we're running now, I was partnered with someone else at the time, and he was pitching us a deal. And I really liked him. I saw a lot of potential in him, and I'm like, hey, why don't you come work for us? So he did, and he already knew a lot of what was going on, and we were able to train him on some other stuff, and our personalities aligned and we worked well together, so we ended up starting our own venture once the other one wrapped up. I've met a lot of people along the way. A lot of people come in just through basic networking, just reaching out, looking for deals, trying to raise money from people. And when you find someone that you think would add value to your operation, ask them to come on board.
I think there's a lot to network. I think a lot of people leave a whole lot on the networking table. In my opinion, I think the key to finding partners is start to collaborate. Whatever level you do is, if you meet somebody and you like them, find a way to start to collaborate. And if you can start the collaboration process, it's almost like dating. You work together on a couple of small things, maybe you're helping each other with underwriting, but you'll quickly decide if, hey, this person has long-term potential as a partner or not. I talk to a lot of people who are in similar positions as you, Beth, and a lot of those are people are looking for the same thing. They're looking for partners. 2 months will go by and I'll talk to them again. They're like, yeah, we're not together anymore. It wasn't a good fit. But I think that's really what needs to happen is that collaboration. However big or small it may be, just start with some sort of collaboration when you meet people and take it from there.
That's really helpful. I know so many people I talk to, they're in the business this week and the following week they're no longer. It's hard to find somebody who's sticking and staying, and so that's good to know. So
It
thank
is.
you. I appreciate that.
It is.
Yeah, I just was curious. Are you going to continue to stay in the Phoenix market?
It's getting really difficult right now with the pricing. I think is going to adjust a bit, but we're having a hard time right now getting consistent offers on our properties for sale, and the renovation costs just keep going up. It's hard to tell. I'd like to because I spent the past year building a strategy and a business in the Phoenix market, but I'm also open to other places where I can actually get cash flow. I've realized that there's really just no cash flow to be had in the Phoenix market. Even with the rents being so high, it's hard with interest rates being high. And I think I'll definitely be interested in looking at other markets.
Yeah, and I noticed, Elijah, you said you're transitioning from a short hold model to a longer term model. I think there's cash flow available in every market. You just got to change how much debt you bring to the table. If you come in at 50% leverage, you can probably get cash flow in Phoenix. But I mean, the question is, if you come in at 50% leverage, are you going to get the returns you want?
But when you put up more equity than your cash on cash, goes
Yep.
down. At the end of the day, I'm really looking for cash on cash. And, I would love to be above 10% cash on cash. And that's very hard to find right now. Most of the syndication deals that I'm seeing come across my desk are in the 5 to 7% area. I think at least for a syndicator who can bring a 10 to 12% cash on cash deal, that would be very attractive to people.
Yeah, I think so. And my understanding is Ohio is a great place to find that
Mm.
cash flow.
It is.
You're where it's at. Yeah, I'm actually looking at a small JV property in Akron, Ohio right now. I know it's the other side of the state from you, Beth, but something that's got me excited. Anyway, last question for each of you, because we do have to wrap up. And Elijah, you get to go first. How can listeners learn more about you?
Well, hopefully those listeners become
I know,
investors one
right?
day. The company that I'm running right now is called Goldhawk Capital, and you can go to goldhawk.us. Or you can find me on Instagram at Elijah W. Brown. I'm not super active there, but feel free to follow me. And I'm also on LinkedIn.
Beth, same question for you. How can listeners learn more about you?
Sure, you can visit my website at www.lifestyleequitiesgroup.com. There are two E's in there with between lifestyle and equities. Find me on LinkedIn under Beth Underhill. Just started my Instagram at Investing with Beth. It's new. So follow me so I have more followers. But yeah, that's where you can find me.
All right, awesome. We'll make sure we have those in the show notes. And you know what? The Diary of an Apartment Investor is also on Instagram. So while you're on Instagram following these two, definitely give us a follow as well. Thanks for your time, both of you. I very much appreciate it. And this is going to be a great little show.
Thanks so
Thanks
much,
for
Brian.
having us. Thank you.
Hey, if you like that episode, make sure to subscribe. But more importantly, if you haven't joined our multifamily educational community yet, which we call a Tribe of Titans, you are missing out. Get 30 days free by clicking the link in the description to this episode, or go to thetribeoftitans.info, and we'll see you there.